Hello, my favorite traders. Welcome. Today is Friday, August 5th, and this is an episode of Burn It Down Fridays. So that's what the peeps in my little circle like to call. What ES likes to do on a Friday is just let's burn it all down to the ground. So all of the gains and everything that we made during the past week, that's all pretty much forgotten. And this morning when I woke up a little late. I woke up around like 7:15 or so, and I was watching the charts on my phone, and I noticed this dumpster fire of a candle that happened at 7:30. So here you can see literally in about, I think this candle is the 2-minute candle. Yeah. We went from 41.60 all the way down past to 41.22. That is a massive, 38 points just trashed in the early morning. So somebody was up having fun with the computer buttons this morning, the market maker gods. So right here I have, this is the 2-minute chart pulled up. And what I have outlined is I have in pink is my supply area and in green is my demand area. So the supply area means that it's where we have sellers who want to unload, and the demand area is green where buyers want to buy the market up. All right. And this is the area that we play in between. So what I did yesterday was I cleaned up my charts a lot because there was a lot of activity happening. And I went all the way back to May to see the highest points that we were at on ES. So I noticed that on May 29th, we had a top here of 42.0575. And then we had another top, maybe that date's wrong, of 41.9150, or maybe it hit it twice, 2 different times. And then going back to June 6th, and as recently as yesterday, we hit 41.72. So those were my high marks. Then we had this massive, this really strong daily supply level that we just broke down below at 7:30 in the morning, and that's 41.56. So I don't know if you watched my previous video, but I said just watch out for that 41.58 level. That's super important. So I've had a big, massive mango bubble tea for lunch with some pad thai. It was amazing, but I feel like I've had a little bit too much sugar right now. So this formation here that I just drew for you with this kind of like wedge happening is known as a bear flag. So you'll see that this is the flag pole, and then this is the flag. So a bear flag indicates that we're going to have continued bearish action once the market figures out what we're going to do. So after that bear flag formed, we did fall down a little bit more. We fell under the key level of 41.23 all the way down to the next key level that I had marked of 41.0575. And then we kind of consolidated there until the market opened. And then we will get into my trade recap today and why you can find freedom in stop losses. So here we go. All right, so let's get into the trade recap for today. My levels of interest were, if we could stay above 41.20, I would look to target 41.33 all the way up to 41.40. So here I am, I'm in the trade. So far, it's a long trade that I am in it at 41.2975. And right here, you'll see I have my stop set at 41.25. I am flirting with whether to move my stop up or not because I don't like the fact that we have that top wick on that candle, and then this candle kind of looks like it can't sustain the bullish action that we need. So I'm debating whether to put my stop at the 10 EMA, and if it crosses this, I'm out. So as I'm playing around with trying to move my stop, I actually get stopped out of the trade. And boom, I had 4 contracts, and it ended up being a 90-second $900 loss, which goes to show you why it's so important to set your stop losses wide enough, but not too wide to do damage. And the one thing that I really learned today about stop losses is stop losses can free you up to think more clearly, because initially when you're in the trade, your brain starts to get hijacked a little bit, and you start to hear that crazy voice in your head that says, why don't you just stay being a project manager and don't try to be a trader, because you're never going to make it, right? So a stop loss allows you to become more objective. So here I am waiting for a pullback into about 41.25, because the market likes to flirt with you. It's never going to give you the move that you want immediately. There's always going to be a bunch of noise. So what I'm doing right now is I'm just kind of watching and seeing if we can hold this 41.22 level. And I'm watching, and you can see as these candles develop that we go all the way back down to about 41.22.75. So now we have 2 sets of double bottoms here at 41.22.75. And I'm kind of worried that we're going to break down. So I'm thinking about going short. But my gut is telling me when you think everything is going to be bearish, that's the time to see where you can be bullish. And I learned that from Al Brooks, who's a master price action trader. So now I'm back in the trade. I'm getting ready to get back in the trade. It's around 41.23. I want to see if it's able to hold this level, and I'm looking to get in once we cross the 10 EMA, which is kind of my touchstone. So I'm kind of waiting to get back in, because now it looks like we're making a series of double bottoms with hammer candles. So if you see these 3 candles right here, the red, the green, and the red, they're forming almost hammer candles, meaning that the wicks are being bought up, meaning that we have buyers there. We just need a strong enough push upwards to get the upward momentum going, to see if we can reclaim some of this loss that occurred at 7:30. So now we have a doji happening, and now we're making another move up, right? But we're still holding that 41.21.25 level. So now we're at 41.25, and I've decided, okay, I'm going to get back in and give this trade a minute to work. But I will not lose anything else on this trade. Like, I am watching it. If it even thinks about going underneath that 41.22 level, I'm out, and then I'll just get back in. So I'm down about 1.5 points. Now it's starting to turn around, and I just really needed to kind of push up a little bit. It's flirting with my level. And it's, it's ES. It's going to make you work for it. How badly do you want it? So the thing I was saying about stops is stops are a little bit tricky, because you want to set it wide enough that you give yourself a chance for the trade to work, but you don't want to set your stop too wide, like you do what I did right now and just get yourself stopped out for a stupid reason, when I could have cut that loss really way smaller. Instead of it being a $900 loss, it could have been a max $375 loss, right? So now I'm in the trade. I have my stop set at break even. Now I'm watching this candle right here after we have our strong move up to 41.27. It's making a slight retracement, but the good news is this candle is getting bought up. So you saw when it initially formed, it was very bearish. Then it's getting bought up with that nice bottom wick that we like to see. So now I'm just kind of watching it, right? Because I want it to hit my first target. My first level that I was watching was 41.33, where I set my target at 41.3250. And then the next level, if we had continuation, I wanted to target ultimately close to 41.40. But of course, we have to see what the market wants to give us. You know, we can't impose our will on the market. Another thing I learned about setting your stop losses is it depends on the movement of the instrument that you're trading, right? Like if you're trading crude oil, that only moves a couple of cents, but ES can skew so widely, but you have to just know where you're wrong. So before you get in a trade, know where you are going to be wrong and just cut it, because a trading psychologist said it really nicely one time, where she said that the market is like a buffet. You can throw food on the floor, don't worry about it, go back and get more. And that just stuck with me to be like, yeah, this trade can be a loser, but the next one can be a winner. So don't worry about it, which is something that I am working on. So now this trade is working. We are hitting VWAP. I want to see it get over VWAP and hit the first target that I have set, which it has. And now I've sold those 2 contracts for 7.5 points. And now I'm seeing, okay, we've got strength coming in. We've got the wind at our back. This trade's moving, it's working. I want to go for 41.39. So I'm about to move my sell limit order up to account for the price movement. I'm not touching my stop at all. If it breaks down to where I'm only up 2 points, then I'll close it out and I'll get back in the trade. If it looks like the price action is going to continue. So at this point, I'm making the decision whether to actually move and target that 41.35 area. Another trader that I know, what he does when he's going in on his entries is he'll do a starter position of 2 contracts. And then if that works, he will then increase and go heavy on his contracts and go to his full size. I may try to do that. I think that's a good plan, because then if you're stopped out, it's a minimal paper cut loss. It's not a crazy one that you're going to try to recover from. So here you'll see that price action has moved a lot, right? So I sold the 2 contracts at 41.3250, and price went all the way back down to about 41.2650, I believe, or maybe 41.27. So now we're climbing back up. We've got a nice hammer candle here that I'm estimating that we are getting ready to set ourselves up for the next leg up in price movement. So the candles are pretty strong. The buying volume is strong. I am also looking on my other computer screen. I'm looking at the price chart. I'm looking at the 5-minute price chart to see how much volume's coming in, and then I move it down to the 2-minute so I can kind of look at the minute chart while I'm watching the 3000 volume chart. So now I'm noticing a pattern that's going to start to form here a little bit, and it's a pattern I like to call Spike Up Linda Mountain Climber, where we have this move up followed by this slight pullback and retracement, which then starts to form almost like a flag pattern. So we're forming like kind of a steep bull flag. The big thing is that I'm just making sure price holds at that 41.28 level, which it does. So I'm giving this trade time to work. I entered this trade at 8:49 a.m. And I'm just giving it a little bit of time to see what happens, to see if I can get it to the next level. And two, for me, it's a little bit uncomfortable to hold the trade for that long because it's like, oh my God, I want my money. But I am learning that to be a winning trader, you can't just take a small profit. Like, if you really have a plan for your trades, don't try to scalp for 1 tick or 2 ticks or a pointer, or, like, don't scalp for 5 ticks or 2 points or a point, but really, like, plan out your trade and go for it if everything's working in your favor. So there's a balance, right? So here I've hit my 41.39.50 level that I was targeting. I sold those 2 contracts and I made 14.5 points off of those 2 contracts. And now I'm just kind of watching and seeing what price action is going to do at this point. And it's moving up. It's moving up some more. We've got it kind of stalling out at that 41.42 level. And then I'm watching to see if we like do another flag formation and possibly retrace a little bit more and then come back up, which I think we might at this point. And then we now have the full pattern that has finally emerged. So this screenshot is from the market open to 9:14 a.m. I got out of my trade. I closed out the trade at 9:02. And this is the spike up Linda mountain climber pattern that I like. So what we see here in the beginning was I entered a bit too early. If you go back to right around the 8:40 time frame, I entered a little bit too early, and I entered above the 10 EMA. I should have waited a little bit longer for us to kind of pull back and hold, right? I should have let these double bottoms form since we were in the area that I was looking for us to bounce from. So again, we're in the key level area that I'm watching of 41.23, and then I'm just kind of waiting to see how price action moves. So actually, my stop freed me up to be able to think a little bit clearer. Even though I was not happy about taking a $900 loss, my gross profit off of my winning trade was $2,200, which left me with a net profit of $1,300. So always honor your stops, cut a little quicker to get back in if you see things are working out, because more often than not, you'll probably get a better entry if you get stopped out and then you give yourself a minute to refocus, reprocess, and get back in. So going back to this pattern that I like, it's a spike up Linda mountain climber pattern, and I named it after Linda Raschke, who is a phenomenal trader. I was watching one of her webinars, and she talked about this pattern, and she also talked about giving your setups fun names, memorable names, so you get excited about looking for them and they really become yours. So what this pattern does is it moves up, it forms a flag, as you can see, kind of this bull flag. It's a sideways flag. Here is the flag base, followed by the actual flag with the yellow mark. And then it's going up again, a tiny pullback. And then what I do is I draw the trend line after the first flag and after it's holding the upward momentum to kind of see where we're going to end up. And then it's the second flag and the third flag. So usually this pattern is good for about 2 or 3 flags. And then you see, like, I could have held longer. So I exited my trade at 9:02. I could have held until what is this right here? Looks like about 9:08 or 9:07, maybe 5 more minutes, and then I would have been up 6 more points, which would have been phenomenal. But at that point, I wanted to close out my trade because I had hit my target and I was selling into good strength. So that's my particular trade management. And I hope that this recap has been helpful. I hope you learned something. I hope you enjoy it. And always know that you should honor thy stop. Have a wonderful day.